Yesterday we had a conversation, Mark, about how you were turning increasingly bearish. Well, I guess you must be feeling pretty vindicated this morning with the price action overnight.
Good morning. Well, it's very short term, and this is a market where the instinct to buy the dip is extremely strong. At least in the short term, yes, it has gone in the right direction from yesterday. I think some important context here is that my narrative over the past year is that we're, in an incredible AI capex bubble, but we're in the inflation stage of that bubble. When you find a bubble, you hop on board. Now, there's been periods where I've been tactically bearish around that. In March, I was tactically bearish because I thought the war was underpriced. I thought it was you get back in the AI bubble once we were trading the ceasefire theme. 2 weeks ago, after the Trump-Xi summit, I said that was the time, I think, to turn tactically bearish again. Now, that's not worked out, that last leg. And that's one of the things that I'm finding a little bit more, why I'm getting increasingly more bearish about the whole AI bubble. Because in the last 2 weeks, we've seen a more negative narrative around the Strait. We're seeing increasing economic damage every day. We're still not seeing the Strait open. We're still not seeing energy flow freely. We're still seeing the more entrenched damage from the supply chain disruption, and yet the AI meme stocks continue to just go absolutely crazy. And it's because that wider connect that I started to feel that, in fact, the AI bubble may not go on to the next earnings season at least, which was my narrative up until yesterday. But in fact, we may be actually kind of seeing the popping around now. So that's kind of the new narrative that I'm trying to address in this week. The short-term price action helps a little bit, but it's, this is the instinct to buy the dip is strong.
Do you think Mark, it's interesting, isn't it? I mean, do you think it sounds like you're cautious. You think maybe the dip buyers do come in at this point and take advantage once again, and maybe that tactical view of yours gets derailed by that?
100% that the dip buyers come in. I just think that they must be almost out of momentum. You look at almost any way to value anything. You look at the IPOs we got this year from SpaceX and OpenAI. You just look at the earnings projections. Everything is priced to extreme. So of course the dip buyers are going to come in. The problem is I just think that real economics is going to squeeze them. And the dynamic is now is that so much of the real economy actually depends on the wealth effect from this kind of booming stock market. So the reason I'm kind of transitioning from, the 2 weeks ago kind of tactically a little bit more negative on markets, but thinking you'd ultimately buy this dip, to not be convinced you buy the dip, is that I think the conditions are now ripe for a negative spiral to start, because the economy is only holding up in this K-shaped economy because enough consumers have a positive wealth effect from the stock market booming. If the stock market starts suffering, then they start consuming less. The economic damage gets worse. That means we start trading that negative economic narrative a little bit more aggressively in the stock market. So I now think we're getting close to that tipping point where we can start a negative spiral. I guess I'm still on the fence if this is this is really the top, but I'm now suddenly leaning that way as of yesterday when I wasn't before.